All right, folks, just a quick little video. This is the area I was watching on this morning, and we were waiting for PMI number to come out at 9:45, and I was expecting it to likely whip up into that and then look for a sell-off. And I tweeted about that this morning as a potential scenario. We were waiting for 9:45 news, not just simply waiting for 9:30 opening. This old high here, why this one is the highest one in the range from today's opening. Looking back, here you go. This is the first one you go to that would be higher than this one. And before we get to this volume imbalance. So we're stuck essentially inside this range, waiting for it to come out of that. So we can obviously trade inside this range, as you watched me do today, but it takes a little bit more patience. So we can drop down into a 60-minute chart. All right, here is the 1 hour chart. You can see how we did not get up into that volume imbalance on the daily chart. We swept the buy side liquidity twice, once, twice, broke down, fair value gap, sell side liquidity, and the 30-minute fair value gap. So notice we have this big run here, but if we drop down into a 30-minute chart, now I use the 30-minute chart because you can clearly see that imbalance right there. So failure to get up above this high here and run for that. That's what we were waiting for. Confirmation one way or the other if it was going to run there. Not in a hurry to take a trade. First trading day of the year. Everybody's going to be wanting to get in there and do something right away. We have a fair value gap there. And you can see all those tweets were mentioned before the fact. And then I mentioned that we would draw down likely into this area here. So let's go into a 15-minute. Okay, and very clear 15-minute time frame fair value gap. Beautiful return into it, repricing, and then lower down to a nice target of 38.14.5. 5-minute chart. Market trades above again where the buy side is. Nice round number 3,900 there. Breaks lower. This low here, we're going to look at that on a 1-minute chart. All right, on the 1-minute chart, you can see we had a run up into where buy side is. Market breaks down, takes out a swing low. Now, why do I like this low and maybe something like this one not so much? Well, you could have used this one here where we went below it, right on that candle. And then we traded right up inside this imbalance there. That's more or less an institutional order flow entry drill. It breaks lower, really changes the market structure here and over here. So this is going to be a little bit more of a quality type setup. So we have a fair value gap in here. As it traded up into that, that's an expectation of lower prices because this is also a breaker. Bearish ICT breaker. Okay, so inside this last down close candle, it's returning back up into, notice the bodies of the candle, they're respecting half of that range from the candle's high and low. That right there is mean threshold. Mean threshold is half of an order block. The market breaks lower, creates another imbalance. Fair value gap from this candle's high, that candle's low, and that shaded area in here, right there. So I'm going to take these off as I talk about them because it's no longer important. And we have the up close candles here. Once we break through it, it's a bearish order block, an institutional order flow entry drill, and a fair value gap. So there's lots of confirmation for wanting to be a short seller here on this candle as we trade up into it and trade lower. Leaving that open, okay, leaving this range here open is what? Breakaway gap. Okay, the market trades lower into our fair value gap on the 15-minute time frame. It consolidates. I go short one more time and accelerates down into the 30-minute fair value gap here. And as we went down below it, limit order was filled. And then we retrace all the way back up to a perfect return to the 15-minute fair value gap. Look at the precision there. Now go back and look over here. Do you see any kind of classic support and resistance that would justify that perfect precision right there? No, but the algorithm does, and it sees the fair value gap that I've outlined on the 15-minute time frame. That's real support and resistance, folks. The market trades lower down into the low end of our 30-minute fair value gap. Beautiful delivery, and I more or less told you all to screenshot it on your own chart, not just simply take my charts, because that's a lazy person's approach to doing it, and you won't learn that way. You want to get in here and get comfortable marking your charts up. It takes a little bit of effort, takes time, and it's important for you to be able to do it. And if you don't do it, if you don't like doing it, I promise you trading won't be a successful endeavor for you. You have to be involved. You have to do it yourself, and it requires a lot of effort on the part of the students. Market hangs around, works inside one more time. Consequent encroachment, which is the middle of an imbalance. Mean threshold is the middle of a order block. Consequent encroachment is the middle of a gap, okay, or an inefficiency, like a fair value gap, buy side imbalance, sell side inefficiency, or sell side imbalance, buy side inefficiency. Either or, and just write that down because we'll build on that as we go forward in the mentorship. But it goes halfway up into that and then clears the buy side, sell side's below here, attack it, and run it down to a really beautiful turning point at 30.14 and a half. And then now we've returned back up into that 30-minute fair value gap, and now consolidating in around and working the top end of that 30-minute fair value gap. So we'll be looking to see an eventual breakout of, not that I'm a breakout trader, but we want to see a breakout of that daily range before my interest is really peaked on any sustainable price run for analysis purposes. Otherwise, in layman's terms, in easy language, we have to be an intraday scalper until there's a higher time frame daily narrative at work. So that way, everything we look for is on a small time frame and not expecting big monster moves. All right, so we're watching price this morning, first trading day of the year. I went short on two fair value gaps and one at the top of the orange fair value gap at 38.60. Looking for a continuation down into the levels I shared on Twitter. Initially, I thought that we would get 39.20 as a run-up aggressive run, as a Judas swing, like a fake rally aggressive during the PMI numbers at 9:45. The market was not having that. So that's why I said we have to wait and see what the market does. It failed to run above the 39.05 level. So I waited for the shift in market structure at just below 38.72 and 3/4, 73. And then return back into a fair value gap. You can see the entries on the left-hand side on that 1-minute chart. Broke down, traded to gain another short entry into the fair value gap and also bearish order block. And the third entry is at the top of the orange fair value gap at 38.60 as it traded up into that, looking for heaviness going down into the 38.39 level. So I took one partial, leaving two contracts on, and I want to get below that 38.42.50 level. That's where sell side is. You can see that noted on the right-hand side on a 30-minute chart. Now, why am I using a 30-minute chart? I want to see price remain below that fair value gap here on the left-hand side. If it goes above that, then I'll probably have to want to close the trades, what I'm thinking, but I want to see it remain heavy. Heavy means I want to see it go lower and have difficulty rallying higher. And if we trade down below 38.42.50, I will take one off, but rejecting that 39.20 level, like I was expecting, that daily volume imbalance up there, right-hand side chart, the upper orange level, that to me was a likelihood of a draw on the news driver. Okay, but I'll take another partial off here, and we'll see if it wants to go down and take that. I made a low-hanging fruit objective now, and we'll see if we get that. Boom.